Vauld, an Indian cryptocurrency startup, is in the middle of a crisis. Welcome to Backstage with Millionaires. I'm Caleb, your host, and if you haven't heard of Vauld already, they're kind of like a neobank for cryptocurrencies, and like I said, it's an Indian startup, but they are headquartered in Singapore, which is the case for a lot of Indian crypto startups because the regulatory situation here in India tends to change rather quickly, whereas in Singapore, things are a little bit more stable. And as of this week, they've stopped allowing their users, their customers, to withdraw, trade, and deposit using their platform. So here at Backstage with Millionaires, we haven't really been covering the crypto crash, or some would call it the bursting of the crypto bubble. There was this boom for more than 2 years in the crypto space, and now all of that is over. There's rising inflation around the world. You've also got this global economic slowdown. And so people are taking their money out of cryptocurrency and they're putting it in safer investment vehicles, which has resulted in cryptocurrencies like stablecoin Terra USD and its sister cryptocurrency Luna crashing and wiping out more than $40 billion of investor money. You've also got Bitcoin losing 50% of its value since May, and this is basically creating a panic where people are just pulling their money out of cryptocurrency platforms like Vauld. And in the case of Vauld specifically, in the last 20 days, customers have made withdrawals in excess of $197.7 million. And this is why the company has stopped allowing these customers to withdraw their money. And also the company's CEO, Darshan Bhattacharya, announced this news via a blog post. We have made the difficult decision to suspend all withdrawals, trading, and deposits on the Vauld platform with immediate effect. We believe that this will help to facilitate our exploration of the suitability of potential restructuring options together with our financial and legal advisors. So there's a couple of potential paths forward here for Vauld. One would be for them to do the right thing and reverse this decision and allow their users to withdraw the money that they trusted Vauld enough to put into the platform. They should be honoring that trust. But I don't think that's going to happen. As you could probably tell, I emphasize the word our here in their statement. It seems like they're very focused on themselves, not so much on their customers, which is very unfortunate. Another option is that they could be acquired by another crypto lender, and it seems like they've already settled on a buyer, London-based Nexo. So Nexo has said that they would buy up to 100% of Vauld and reorganize its future operations with the aim to accelerate its deeper presence in Asia. Now, at this point, this is probably the best possible outcome for Vauld's stakeholders. Being acquired by another company means that they won't lose all of their equity in Vauld, whereas if Vauld goes out of business and just ceases to exist, then they walk away with nothing. This also points towards a larger trend in the crypto space right now, which is consolidation of these crypto startups. Now, another facet of this story that I wanted to talk about is the impact that Vauld's crisis has had on social media influencers who promoted Vauld, and now their followers, a lot of their fans, are upset because they took these influencers' advice and lost money as a result. In fact, we here at Backstage with Millionaires actually covered Vauld in the video that we made about India's top 10 cryptocurrency startups. And while that video wasn't sponsored by Vauld, I think this crisis that Vauld has faced this week has really opened my eyes, and I think the eyes of a lot of social media content creators and influencers in India to the importance of being completely honest and straightforward with promotions. We as content creators need to clearly disclose when we're being paid to promote something, and we also need to clearly state if there are risks involved in using that product or service that we're promoting. And these kinds of rules exist in countries like the United States and China, possibly even in Canada, where I'm from. I'm not sure, I haven't looked it up, but so far things are a bit more relaxed in India, and I personally, as a consumer as well, think that that needs to change. And as a content creator, there's a lot of pressure right now from brands and PR companies to not disclose an ad or a sponsorship, to use ambiguous language, or to just not outright disclose it at all. And it makes sense. If I, Caleb, am recommending something to you personally, you're way more likely to buy it than if I'm being paid to recommend it and you're aware of the fact that I'm being paid. And we here at Backstage with Millionaires have actually faced this kind of pressure ourselves, where PR companies and brands will put pressure on us, and I think a lot of other content creators in this ecosystem, saying that they are not going to partner with us, or they're going to pay us less if we make the disclosure straightforward and clear, if we clearly state that we're being paid to promote this product, if we clearly state that it's a sponsorship. And so I think that it's up to us, the content creators, to take a stand here, to put our feet down and say that no, we actually care about our audience, we want to be honest with them, we don't want to mislead them, and of course we're going to keep doing promotions. That's how we sustain ourselves financially, but we're gonna do it voluntarily in an ethical way. Because some brands and PR companies are pushing in the opposite direction, and so we need to push back, at least until the proper government laws and regulations are put in place to make this standard practice. All right, next up, let's move on to our founder spotlight now, because this week I wanted to highlight the co-founder and CEO of Lenskart, Peyush Bansal. And the reason I wanted to highlight Peyush today is that officially this week, Lenskart has become the largest eyewear brand in Asia. This happened after they acquired a majority stake in Japanese eyewear brand Owndays in a deal worth $400 million. So just a little bit of information on the state of Lenskart right now. They have over 1,000 stores in India, and they're looking to open 400 more with their latest fundraise of $200 million. And this latest funding round also means that the company's valuation has almost doubled since its last round, from $2.5 billion in May of 2021 to $4.5 billion now. And I think the coolest part about all of this development is that under Peyush's leadership, the company is actually profitable. They registered a profit of 29 crore rupees in the financial year of 2021. We're not sure yet about the financial year of 2022. Hopefully, they're still profitable. But anyways, for the next stage of growth, Peyush is now focusing on taking Lenskart global. For this, he's formed a subsidiary company of Lenskart called Nexo Brands, which is going to be focusing on investing and acquiring eyewear companies around the world. And it's going to be kind of like a house of brands company, which will be operating many D2C brands underneath it, which will be a part of their portfolio. In a recent interview with Business Today, Peyush said that globally 2 billion people still don't have access to glasses. So if we want Lenskart to be the Microsoft of eyewear or Amazon of eyewear, we do have to have global aspirations and invest in it for the long term. Now, what's really interesting to me about Lenskart going global, and something that I'm really excited to see, is how they fare in a much bigger market. Currently, they are a big fish in a small pond, a relatively small pond here in India. They've conquered the market, but going global means that they're going to be up against much bigger fish, like for example, Italy-based conglomerate Luxottica, which is valued at more than $75 billion. So I'm really excited to see how they fare entering this massive, massive global market. And I really hope that they do well, because I love seeing Indian brands going global and succeeding and becoming internationally recognized brands. All right, next up, let's move into our bird's eye segment now. And before we start, just one little note here. I'm filming this video on Wednesday. Normally I film it on Thursday, so there might be a one-day gap in the information that you would normally be getting about all of the funds that have been raised in India's startup ecosystem this week. But if you want the most up-to-date information, we do send out a newsletter on Sundays with all of the information about all of the funds that have been raised throughout the entire week. It's fairly in-depth and detailed, so make sure to sign up for that. You can find a link to it in the pinned comment down below. Just click that little link and you can sign up to get our newsletter sent to your inbox. But anyways, this week, 11 Indian startups have raised more than $170 million. So first of all, of course, we have the eyewear space, and more specifically Lenskart, raising 70% of all the funds this week. That's $120 million, and they raised these funds at a $4.5 billion valuation. Then we have fintech startups raising 13.2% of all the funds this week. That's $22.5 million, being raised by companies like Lendingkart, which raised $10 million, and MarketWolf, which also raised $10 million. Then we have edtech startups raising 6% of all the funds this week. That's $9.8 million, being raised by companies like Antwalk at $7.5 million and Credo at $2.3 million. And then finally, we have D2C startups, and one startup in particular raising 4% of all the funds this week. That's $7 million, being raised by Ace4 Accessories. All right, next up in the news, just some quick little updates for you guys. First of all, things at Ola are not going well. It looks like they're going to be laying off between 400 and 500 employees. According to a source quoted by Money Control, key managers were asked to drop a list of people from their respective teams last week who can be let go. Now, in other Ola news, Ola Electric is also struggling right now, and they're going through a difficult time because of the decline in their total vehicle registrations in the last 3 months. In April, customers registered 12,703 units, which fell by 27% in May to 9,255 units, and then another 36% decline to 5,883 units in June. And this means that Ola Electric is also no longer the king of India's electric two-wheeler space the way that they used to be. They lost that position to Okinawa in May, and then they dropped down another 2 spaces to Ampere Vehicles and Hero Electric, and now they're in 4th place behind these 3 other companies. Oh, and one more piece of bad news for Ola Electric is that Yashwant Kumar, who was the senior director and business head for charging networks of the company, has decided to move on. He's quit the company. All right, next up in the news, the value of Chingari's crypto token, GARI, fell by 80% in 24 hours. So the sequence of events here was that on Monday, July 4th at 9:37 p.m., the token was trading at a value of 57 rupees, and then exactly 1 hour later, the GARI token was trading at 10 rupees, and then shortly before midnight, it had reached an all-time low of 7 rupees. Now, there were initial rumors that this was because of a hack, the cryptocurrency had been compromised, but this was later denied by the company in an official statement. And they said that the major reason behind this price drop was that a major shareholder of the GARI token had sold $2 million worth of it, resulting in a shortage of liquidity. All right, next up in the news, Google is launching Startup School India to help 10,000 Indian startups in Tier 2 and Tier 3 cities. So the Startup School is going to be a 9-week program where startup entrepreneurs can come together and chat with leaders at Google. And Google, through a blog post, said that 90% of all startups fail within the first 5 years of their journey, mostly for the same key reasons: unmanaged cash burn, flawed demand assessment, ineffective feedback loops, and lack of leadership. And so through this program, Google is aiming to bring together industry experts to share knowledge with young entrepreneurs and help them learn. And the program is going to be featuring people like Rajan Anandan, who is the managing director of Sequoia Capital, Varun Alagh, the co-founder of Mama Earth, Vivek Gupta, the founder of Licious, and many, many more prominent people in India's startup ecosystem. All right, that is all the startup news that I have for you guys this week. I really hope that you enjoyed the video and that you learned a lot from it. Big thanks now to all of our Backstage with Millionaires members, our unicorns, our decacorns, and our hectacorns, and big thanks to you for watching this video through to the end. All right, I will see you in the next one.